Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Sphere Entertainment Co. quarterly report. Sphere Entertainment Co. offers a diverse range of businesses and services through its two segments, Sphere and MSG Networks. The company's key offerings include multisensory entertainment experiences powered by cutting-edge technologies, regional sports and entertainment networks, direct-to-consumer streaming products, authenticated streaming services, live local games, and other programming sports content. These services cater to various audiences, providing a unique blend of live entertainment and media offerings. Sphere Entertainment Co.'s stock price surge of over 65% in the past year can be attributed to several key factors. The successful launch and performance of The Wizard of Oz at Sphere was a major catalyst, with the show selling over 1 million tickets and generating $130 million in sales by mid-October. Strong third-quarter financial results, including a 15% revenue increase to $262.5 million, also instilled investor confidence. Additionally, the expansion of concerts and residencies at the venue, as well as strategic partnerships and sponsorships, have contributed to higher event revenues and enhanced the overall experience for visitors. The company's share repurchase program and positive analyst revisions further boosted investor enthusiasm. Perhaps most notably, discussions for international expansion, including a potential Sphere Abu Dhabi project, have sparked optimism about the company's future growth prospects. Overall, these developments have combined to drive significant growth in Sphere Entertainment Co.'s stock price over the past year. The primary drivers of revenue growth and decline are multifaceted and influenced by various factors. On the growth side, key contributors include the expansion of new venues such as Sphere Abu Dhabi, increased average per-show revenue from high-demand events like The Wizard of Oz at Sphere, and higher sales of sponsorship inventory. Additionally, royalties from licensing creative content and intellectual property, as well as potential future venues in domestic and international markets, are expected to drive growth. On the decline side, factors such as a decrease in distribution revenue due to subscriber losses, absence of revenues from Altus during non-carriage periods, and projected declines in the MSG Network's reporting unit's business contribute to revenue decline. Furthermore, significant adverse changes in market factors or business outlook for the MSG Network's reporting unit, deterioration in the regional sports network's environment, and changes in strategic goals or business direction also pose a risk to revenue growth. The net income of the company underwent significant changes between 2024 and 2025. Initially, it decreased from $-81,954,000 to $151,816, indicating an improvement in financial performance. However, when comparing the 9 months ended September 30, 2025, with the same period in 2024, net income increased by 74%. This increase was largely driven by a significant jump in adjusted operating income for the 3 months ended September 30, 2025, which rose by 129% compared to the same period in 2024. Profit margins also improved due to adjustments such as share-based compensation expense, depreciation and amortization, and restructuring charges. The adjusted operating income margin increased by 46,558 plus NM for the 3 months ended September 30, 2025, compared to the same period in 2024. Despite a decrease in cash flow, net income margins improved due to an increase in net income. The reasons behind these changes are not explicitly stated throughout most of the pages, but it is mentioned that profit margins improved due to adjustments such as share-based compensation expense, depreciation and amortization, and restructuring charges. Based on the extracted summaries, it appears that the company is generating positive operating cash flow. 2 separate sources confirm this, stating that operating cash flow is positive in both years, page 59, and that the company is generating positive operating cash flow overall, page 66. This consistency suggests a stable financial performance for the company. The company's debt level has undergone significant changes over the past year. While total debt decreased from $2,313,881 to $1,983,467 between December 31, 2024 and September 30, 2025, long-term debt increased from $524,010 to $786,069 during the same period. However, the exact total debt as of September 30, 2025 is inconsistent across different pages, with values ranging from $878,026 to $874,857. In terms of interest expenses, there has been a notable decrease. Interest expenses decreased by 65% in the 3 months ended September 30, 2025 compared to the same period in 2024, and also decreased by $17,575 and $19,547 for the 3 and 9 months ended September 30, 2025, respectively. However, there is an inconsistency in the interest expense data on page 35, which shows a significant increase but is not consistent with other pages. The financial performance of the company varied across different segments and regions. The Sphere segment was a major underperformer, recording an operating loss of $84,434 due to high operating expenses. This led to a total operating loss of $129,717. On the other hand, the MSG Networks segment showed promise with an adjusted operating income of $19,299. Geographically, the Middle East and North Africa region performed well, while Las Vegas generated substantial revenue and adjusted operating income over time. Abu Dhabi is also expected to perform well due to a franchise initiation fee and royalties from DCT Abu Dhabi. Management's outlook on company strategy: the company is shifting its focus towards cost reductions and operational efficiency, page 38, while exploring opportunities for expansion in the entertainment industry domestically and internationally, page 40. The success of Sphere, a key venue, is crucial to generating cash flow and meeting financial obligations, pages 55-56. To achieve this, management plans to bring Sphere to Abu Dhabi under a franchise model, page 37, which will help reduce or defer discretionary capital projects. The company's primary focus will be on funding operations and satisfying accounts, payable and accrued liabilities through alternative sources of funding, pages 54-55. Management is also exploring additional domestic and international markets for future Sphere venues, expecting them to generate substantial revenue and adjusted operating income over time, page 56. However, management acknowledges the uncertainties and risks in funding operations, including uncertain ability to generate revenue and adjusted operating income due to factors beyond control, page 66. To mitigate these risks, they may need to take actions such as reducing expenses and deferring capital spending. The company has made several strategic acquisitions and divestitures over the years. In terms of acquisitions, the most notable ones include MSG Networks reporting unit date not specified, Holoplot on April 25, 2024, and the remaining equity interest in Holoplot also acquired on the same date. On the other hand, the company has made several divestitures including the networks merger, a settlement payment of $48,500 to plaintiffs in class, and the distribution of MSG Entertainment and MSG Sports to the company tax-free in 2023 and 2020 respectively. Additionally, the company sold land in Stratford, London, during the 3 months ended June 30, 2025. Concerns about inventory buildup or supply chain disruption exist. There are valid concerns regarding potential supply chain disruptions and inventory buildup in the given scenario. 2 specific instances highlight these risks. Firstly, construction delays and cost overruns at DCT Abu Dhabi's Sphere Abu Dhabi project, page 37, pose a threat to timely completion, potentially disrupting supply chains. Secondly, Altus's non-carriage period of MSG Networks programming networks from January 1, 2025 through February 21, 2025, page 53, raises concerns about inventory buildup due to the temporary absence of these networks. That concludes the financial summary for Sphere Entertainment Co. Feel free to comment below, and I will be happy to answer them when possible.